Yes, good morning, good evening, good afternoon, wherever you are. I'm in Singapore. Here's Martin Schweiger speaking. Christina, I remember I have seen you more than once in our podcast. Please unmute your microphone. Um, is my microphone working?
Yeah, you're good, Martin.
But my quality should be very bad, right?
Your
Because
quality, yeah, it's like a 3 or 2.
okay, thank you for telling me. I
Very
will plug my microphone, which is a USB one.
okay.
Then plug my microphone in again. Oh, hello, Khadija. Good to hear you. Now let's see. Audio. Can you still hear me? 1, 2, 3. Is it okay?
Yeah, it's a 9 or a 10.
Thank you for telling me. Hello, Christina. Um, or otherwise, Khadija, then I talk with you because we have not enough time to talk along the day, and we have busy days. Uh, so I have just found another model of our 4x4 innovation system, and I believe is the recording on? I hope so.
Yeah, and we're also streaming this live too.
Okay, cool, very nice. So what I wanted to say is the following. So I tried to find a better way of explaining the 4x4 innovation strategy. And I wanted to create an image in front of you. Imagine you are somewhere in a very dry region where it rains every now and then. And what you want is you want to capture that rain that is falling down, and you never know where it rains and from where it rains and how long it would last and whatever. And to me, that's a bit similar to running your own company because you always want to catch the rain, which means the people that are there and they are spending their money for what you supply. And it's not about um, cheating them to give you money, but you provide value for what you do. And so that's a very nice how to say a parallel. In German we would say a parallel, but it would be an allegory that you create something by building a device for catching rain. And if you see that in front of you, that device that you have in mind has four walls, and the four walls are the in innovation, research and development, R&D, intellectual property for protecting what you have, and also the freedom to operate. You want to be sure that what you do is allowed. And then you have the market response testing. And each one of those areas is one of the four walls of your vessel to catch the rain, which is sales. But in order to build those walls, you need to put in some funding because without the funding, it doesn't work. So, and in my simple picture, you would have the funding being a tap, a water tap that you put inside the vessel. And the water tap would would provide water going inside, and you need the water to keep the walls watertight. Because if you don't have funding in the form of water, then the walls would dry out, and then they wouldn't hold water at all, because your vessel is made from earth and not from concrete or from steel or from plastic or whatever. And on the other side of the vessel, there would be another tab that is the costs that you have. So the costs are providing the R&D, and the costs are for providing the intellectual property and providing the FTO, and also market response testing costs money. So you have this model of getting water from top, the water either from a tap that provides funding or from clouds that provide rain, which is sales. And you have on the lower side the water tap that pours out water, which is costs for keeping the system alive. And 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 when you have an idea, you build a small vessel with very low wall, a very low wall. The wall consisting of four parts: one part for the R&D, one part for the IP, one part for the freedom to operate FTO, and one part for the market response testing. And as the walls of your vessel, it's a square vessel, not a round one, rise, the more rain can you catch, which is sales. And the sales that we catch is a pre-sales, clearly, because it has nothing to do with sales of a product, because the product is not there. You're still in the idea phase. I don't say stage, because stage is, I don't even know where stage comes from. There's this uh, stage gate or phase gate approach to managing innovation. And um, it's about, are you referring to the phase, or are you referring to the conversion of from one phase to the next one? When we have, according to the 4x4, four different areas that we need to address before we can convert from one phase to the next one. And that conversion is controlled by a gate. And yeah, you call it either phase gate or stage gate. And when you convert, and we have four different phases. The first one is idea, then proof of concept, and then the prototype phase, and then the product version 1.0 phase. And now going back to this image of a vessel that would catch rain, which is the sales in the process. So what you do first is, initially, you imagine you're in that dry place and you want to catch that rain that is sales. So what you build is a very, very low appearance vessel. Four walls you must have, and and you catch some water from the rain. You put in some funding to keep the system alive, and you suffer costs which would drain your vessel. And if the vessel is overflowing, then you have all the power to build another level of walls. And again, four walls as before. You start with the R&D, then you have the freedom to operate, and then you have the intellectual property protection, and then the market response testing. And the market response testing being the rain that fills that vessel that you have built, and it overflows. And still you have the funding from above supporting what you catch by the rain, and the tap that represents your costs that you have when you keep the system alive. And now you're in the proof of concept phase, because you went from the idea to the proof of concept, and then you catch more rain in the in the form of pre-sales, and more people would trust you that you would have the final product, because you have shown already what is the proof of concept, and how would the later product work, because you have shown that the principle it works is already demonstrated, and everybody who has knowledge would know, yeah, okay, that can work. And from that phase, you wait until the rain comes in the form of pre-sales, and the pre-sales would fill your very low vessel that now has two levels, the idea phase and the proof of concept phase, and the four walls, and so on. So this little vessel is overflowing again. So you have more pre-sales than what you expect. So you build a prototype, and the prototype has the same walls, and then you move on to the next wall, to the next phase, which is the product version 1.0 phase. And all those people who did the pre-sales, they are now more confident that the product would be there. And as you have done pre-sales, it would help to create that confidence that you have an idea that can be put to practice, and that would help solve problems. In other words, bleeding necks. There are important problems out there that need to be addressed. And people always tend to say, no, we don't have any important problems anymore. But look around you, there are so many problems out there that need to be solved. And those problems are urgent. And for us, that we develop solutions for those problems, we need to learn how to reword those problems so that those people who have those problems really can feel that they have a bleeding neck, an urgent problem. And that's where we want to position ourselves when we develop our product, which is this vessel that catches rain, which the rain being the sales or the pre-sales. And that vessel gets bigger and bigger so that the funding that comes from the tap on top doesn't count anymore, while the costs at, at the bottom of the vessel, represented by the tap, would still be there. And so at one point in time, there's a balance. And the bigger the vessel, the more juicy the opportunity for those entrepreneurs or those investors out there who do not have own ideas. They need to rely on people who have ideas that can convert rain into something that is the content of the vessel. There are many people out there that sit on big amounts of wealth without any idea of what to do with it. And all what they can do is look around for people who know what they could do with abundance. And the answer is very simple. It's growth. And that picture that I have in front of me is this 4x4, and it tells everything. You, I mean, you can put your funds anywhere to anybody who promises you to deliver something, growth. And there are so many out there. You look into your inbox, people who approach you for investment, and there are so many of them. But none of them has an idea, and they can describe what they do. And so this is where I come from. I mean, I've made a long monologue, maybe 12 minutes or so, and I hope that you didn't understand it as ranting, but this is what goes through my mind right now. And I had this new picture in front of me, and this is what I just wanted to share with you. Hello, Michael, and hello, Carl. Thank you for being here tonight or
Hello,
tomorrow.
Martin. Say, Martin, I want to make a couple comments. I sorry I joined a bit late. So, a couple things. Everyone would like we said last week, positive cash flow. Okay, so at an auto show in Germany, everyone would like to take orders on the concept car and then promise delivery in 19 months if you're lucky. But if you go back and you look at all the new product launches, not only automotive, a builder builds a house. He's got negative cash flow until he sells it. And so maybe 90% of people who are looking at new product concepts and new products or a new house or a new concept car, they like the idea of seeing what they're getting, and they like to have the goods delivered when they put out the money. Now, of course, your pre-sales, I mean, here, pre-sales is a fancy new word in the last decade, and I understand it entirely with Kickstarter and everybody else with pre-sales. But for 100 years, basically, a company takes an order and then they ship. And like I said last week, Amazon is prevented from taking your money until they can prove that they ship you your new sweater or whatever you buy. So I guess I'd hate to be a naysayer, but anytime you place an order for something, you're suffering negative cash flow. You could invest that money and earn interest. you could buy the car from the showroom floor when the new Mustang was launched. So, you know, when Iacocca did the Mustang, he didn't do pre-sales. He put the damn new Mustang on, sorry for the language, he put the Mustang on the showroom floor and people came running to test drive it, look at it, kick the tires. You know, you buy a loaf of bread, the bread company and the grocery store both have negative cash flow until you check out and you buy that loaf of bread. My seat of the pants estimate is 90% of transactions are delivering the goods when you turn over the money. And if you want to speculate, you'll be like the home builder. You'll build a 1 million euro house in Munich, and it takes you 18 months, and you pay all your contractors, and you put it on the market. And if you're lucky, it sells in 2 weeks. If you're not, it takes 6 months, and you're bleeding. You're bleeding the whole time, waiting for your money. So, you know, forgive the idea of pre-sales, my negative on it, Martin, but it's basically order versus shipment and whose ox gets gored, right? The cash flow guy, the CFO sits there and smiles if he takes your money when you place your order for the next new BMW out there. And you know, they may be building it and investing cost and taking risk and everything else, but until you actually take delivery, you're sitting there hoping that your money will eventually lead to that new BMW in your driveway. So, you know, pre-sales is just a fancier term for when is the order taken and when are the goods delivered, right?
Yeah, fully agree. I appreciate your comment, Michael. Is very welcome.
Now,
I
attracting investors, Martin, for a moment, for your water vessel here. You know, if the cash flow is pre-sales or what I call orders, and also the funders, the investors, the people who also are putting water into your hopper there. You know, shareholders typically are also return on earnings greedy, right? The stock goes up when return on earnings goes up, and it's not just a hope and a prayer. When a company can actually show the cash boxes for that money coming into the corporate accounts at Caterpillar or whatever, the investors will buy more Caterpillar stock, but they have to prove in a fiscal year that that money is positive cash flow and earnings that are real, not pre-sales. So keep in mind the world operates with fear and greed, and if you place an order for a concept car, your fear is that it's going to take you a lot longer to get that new BMW than what the dealer promises.
Yes, yes. Uh, and again, I'm repeating myself. Michael, I'm very grateful for those comments. Um, I I have this book. I know. I don't know whether you know this guy. His name is also Michael. Michael Gerber. Have you ever heard of him? He lives in California. He is now in his 90s. And he was the first one 50 years ago to word the theory that the innovation world consists of three archetypes, which is the technician, the manager, and the entrepreneur. And those three archetypes are very different from each other. And this concept is so old, is unbelievable. And the truth behind that is that you can only survive as a company if you have both all three of them together, and it's quite a challenge. But if you have managed that first level already, then you're far further than anyone else on this world if you run a company, because most companies, he says, are run by technicians, which means people who learned how to make money from providing a special service without being able to provide the structure to scale it. And if you have not the structure to scale it, then the increasing demand will immediately lead to a failure of that service. And yeah, I had a personal session with Michael Gerber. Um, I'm still thinking, what's the title of his book? I believe you Americans should be more familiar than myself with that. Michael Gerber, does it say something? Michael Ostrovsky.
Never heard of him. Is he with a McKinsey? You know, is he with an investment banking firm, or who is this guy?
Yeah, he doesn't have a big name in the big five in the management.
Martin, it's
Yes.
beyond the E-Myth, right?
Beyond the E-Myth. Yeah, E-Myth. And E-Myth is a myth that entrepreneurs can change the world by just being an E-Myth, an entrepreneur, which is not true. In a company that grows, you need all three characters. Yeah, it's beyond the E-Myth. And that's a fundamental book that should be taught at every MBA school. And if you have not read this book, then you're not ready for setting up your own company. And that's where I'm coming from. So thanks, Khadija. By the way, yeah, I I I be- I know that there are many companies set up by people that are not and that do not know that concept, and that concept is combine the three personalities into one, and then also apply a system that turns that thing into a clockwork, an oiled machine, a oiled machine that runs without the person who had the initial idea, who was very often an entrepreneur, actually was always an entrepreneur. And turning that chaotic system initially into something that is systematic and can be multiplied so that you can set up more than one location where the same system runs. That's the difference between an enterprise and a company. That's the core message of Michael Gerber. And I'm surprised. Carl, go ahead.
Yes, Michael Gerber, his famous book is The E-Myth. I'm looking at it at his profile online. He's 89 years old, and he has a portfolio of small companies that support, but E-Myth or E-Myth Revisited.
Yeah, actually, Michael is my mentor.
Okay.
Yeah, I talk with him on the phone, and yeah, that's where I'm coming from. And I'm not a multinational company guy. I come from the lower end of the spectrum. I mean, you set up your company and then you try to make it something that can survive without you.
His father was a furniture salesman,
Yeah.
and his mother was a bee honey seller. So
Yeah.
very interesting.
Yes. Very simple guy, but 89 and he's still working.
Yeah.
And Carl, so will you. Don't stop working at 65, please.
I got to get to 65 first.
Yeah, okay. My son just told me last week that's the easy part. Yeah. So what I want to say, the world is not only big names. The world is people that are on the ground and they try to improve their life. And Michael Gerber told me to read one book, and I don't have it here now. It's about the founder of the micro lending idea, and his surname is Yunus, and he's from Bangladesh. Bangladesh is former East Pakistan. You didn't know that Pakistan former was split into West Pakistan, which is today's Pakistan, and East Pakistan, which is Bangladesh. And these two states are the Muslim states of India, and India lies in between. So, sorry to to give a lecture on geography here, but the Mr. Yunus, and he got a national award for this. And now guess his first name is Muhammad. I'm not surprised because this is a Muslim country. So Muhammad Yunus wrote a book, and Michael Gerber told me, Martin, please read Muhammad Yunus' book, and it will change your life, and you will never be the same again. And being a, I mean, if a person of whom I think that he should be respected tells me something, then, and it doesn't cost me $1 million, then I would usually do. So what I did is I ordered Muhammad Yunus' book on Amazon. It's a very thin thing that you can read in 1 hour. I believe it was much longer, much larger when he wrote it, but I got an abbreviated version, and it not only told me the history of Bangladesh, but also about his own history, and that really changed my life, because this Muhammad Yunus, he saw that the poor women, like his mother, his own mother, in Bangladesh, were exploited by the people, by the moneylenders. And the moneylenders charged very high interests so that women who produced simple things like low stools for the people who live in Bangladesh, that's something, or baskets, or I don't know, you name it, simple things. And they invested all their lives into producing that, but because of the moneylenders, these women were left with only 1% of the purchase price. And the moneylenders had the lion's share of the profit, which was much more than 1%. So this Muhammad Yunus was thinking about economically viable solution to increase the share that is left with those manufacturers, the poor women, without resorting into subsidies, these socialist ideas like, oh, we need to redistribute wealth from the rich guys to the poor guys, and we, the government, know better how to do that, so trust us, give us your votes, and we will install a system that would take away your wealth in the form of taxes and give it to the poor. So this Muhammad Yunus was a capitalist, and by being a capitalist, he eradicated poverty in Bangladesh by providing a system of microloans. And when I read this book, this appealed so much to me that since then my life has changed. And so Michael Gerber, I must truly admit, has changed my life.
Say, Martin, you mentioned something 5 minutes ago about, strategies for smaller companies who want to be big. I guess it's important to realize that all the giant companies in the world started out teeny tiny, right? And there was a thing on TV about consumer branding, and they talked about how PepsiCo did its thing during the Depression. They offered a 12-ounce bottle when Coke was selling a 7-ounce bottle, and Pepsi did it at the same price. So, like your Bangladesh story, PepsiCo, and as mighty as it is today, their key was marketing. So these smaller companies who want to be big, including Iacocca and the Mustang, give a car that people say they want. But even the simple idea of PepsiCo giving 12 ounces of cola instead of, and they took some of the sugar out, and all of a sudden their market share jumped up to, at hundreds of a percent in 3 or 4 years after the Depression, and Coca-Cola was blindsided. You take the simple marketing idea of McDonald's. So, they started as 1 or 2 restaurants in LA or Des Plaines, Illinois, and look at them today. all your smaller companies that you're talking about, even payday loans. I think PayPal started out with just one idea: give someone some money before they get their paycheck and let them pay online. And look how big PayPal became. So, it's important to realize that they start out tiny, they end up mid-size, Mittelstand, or what have you, and then they end up being, among the 1,000 biggest companies in the world. But you've got to take the lessons learned, and a lot of those lessons are marketing, not just innovation.
Yeah, sure. The problem is marketing is part of the one of the four walls of the vessels, which is market response testing. And
Well, there's more to marketing. There's the 4 Ps, Martin, that MBA students all understand: product, price, place, and promotion. So again, place is really important. If you're selling bread on supermarket shelves, it's nice to have it in stock when the customer needs a loaf of bread. Pricing, we talked about with a couple of the gurus you invited to 4x4 on pricing, and it goes on ad nauseum. And product is I think your market response testing. See what the customer thinks of the new product or service. And promotion, though, companies, especially food companies, they spend a significant, even double-digit % of profits on advertising and promotion. Even McDonald's Toyland, put a toy in with every Happy Meal. That's your promotion. How to get kids to come into McDonald's. So the 4 Ps of marketing are more than just concept testing.
no, I'm talking about converting an idea into a product, not about converting a running company into McDonald's. And that's why
Mars Candy comes to mind. Their new product was Snickers, and they had Three Musketeers and Milky Way, but then they decided to put nougat, peanuts, chocolate, and name it Snickers, and Snickers became the blockbuster Mars Candy success story. So there's a great new product. They were fat, dumb, and happy with Milky Way and Three Musketeers and other chocolates, but Snickers became their blockbuster product for the last 75 years.
Michael, we all the time we are talking about very different levels. I'm talking about ideas that become a product, and it's not and there's a difference, a very clear difference, and there's a divider between the two. There are incremental inventions and non-incremental ones, or innovations. I should rather call them innovation, because the difference between an innovation and an invention is that the innovation produces profits. And the way large companies approach innovation is very different from the way that small companies or even startups approach innovation. And you cannot apply the management principles that large corporations apply to innovation to the principles that small companies or even startups apply to innovation. Because what is a small mistake for a large company can be a fatal mistake for a small company, or could be a game changer, no, a life changer for the owner of a startup. And whenever we discuss about innovation, we should always make a distinction between who is innovating here. And the good thing is that the small companies come with an advantage, not with a disadvantage. The advantage being they do not need to convince the existing people who are generating income with an existing product on the existing S-curve. Because these people that are on the existing S-curve, they always would want to extend the S-curve by applying the 4P principles that every MBA student can cite from their own pocket, because they know.
But who's to? Then let's add in one additional P into the innovation one. Pain.
Okay, yeah, you can pee on.
I can put some pain on there.
The pun was intended. I'm so grateful, Joe, that you come in, please. Are you representing the guys that produce the daily bread and butter on the table, or are you the guy who is venturing?
I don't know. Yes. The answer is yes.
What?
Yes
Well,
to
here,
both.
hey,
Why
Martin,
not?
Martin, Joe. Okay, Martin, I'll put on my small business entrepreneur hat. Okay, we talked about the Bo Peep pocket fisherman.
What color does it
Uh,
have, Michael?
Well, what? Hold on. I'm talking about the small startup. I'm talking about, okay, here, if Stephen
Colors
K
matter
was
in
here,
marketing.
let me put on my
Uh,
consumer, I'll put on my consumer products hat. If Stephen K were
okay.
here,
What color?
okay,
Is it red?
think of,
Is it green? Is it yellow, blue,
it's a
or
blue
black or
ocean.
white?
It's a blue, Martin, it's a blue ocean. The hula hoop
Uh-huh.
was a blue ocean, okay?
Okay, nice.
So yeah, so I mentioned the Snickers bar. Forget that.
Okay.
Okay.
Snickers
The
bar.
boat, the George Foreman grill was a blue ocean. That grill was an enormous success. The Bo Peep pocket fisherman, again, the hula hoop. I would also argue that McDonald's, wanting to get into the breakfast market, innovated the Egg McMuffin. That wasn't the 4 Ps of marketing. That was a blockbuster innovation that got them into the
No,
breakfast
Michael,
market.
we
not just-
we 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 had some evolution right now. We have now five times peeing. Yeah.
Well,
Yeah, we put in pain.
the
Pain.
pain. Joe, I'll give you a 6P. That's problem solving. We said, create a better mousetrap.
To that pain,
And
right?
Uh,
Or is that
it's
the pill? We could call it a pill.
it's
Uh,
problem solving.
the
Well,
7P
okay.
with a pill.
Well, okay, the birth control pill. There's your pain.
A pill. A silver bullet. A silver bullet.
There you go. That's a B, not a P.
Now P. Silver bullet.
Yeah,
Oh,
right.
No,
pellet.
so, yeah, go ahead.
Uh, so the other day I was working with someone. I was talking about branding, and they were talking really it's you had to have the collective trauma to the same person that you're branding to. And so my collective trauma is spreadsheets. Like I love them, but I don't want to do them anymore. Like I want to work my way out of them. And so the other day I just finally branded another little prop. I branded on their pain point. And I said, yeah, I'm untangling myself out of spreadsheets. And I went to a database. And they're like, oh, that was really elegant and clear. And I have that problem too. How are you doing that? So the pain really is because I bring everything usually to the failure modes and how do you correct from the failure? Or as Michael's offered the work escape, how do the escapes happen and how do you correct and prevent escapes? And Martin, I'm very curious, and by the way, I still volunteer as tribute to be audited as a
Yeah,
startup founder.
yeah.
And I'm curious about this auditing
And
process,
Joe,
and I love it.
you would be surprised. The you know my concept now. By the way, we have changed the brand. It's no longer
Ooh,
first.
you change brand. I love this. I
Yes.
love how you branded on something else. Why?
Yeah. No, the thing is the following. The original brand was First Innovation Bank. Correct?
Mm-hmm.
So the thing is, there is already someone who had the idea of branding his services that are similar with First Innovation Bank. So the working title was now
Too
changed.
close.
Sorry. I don't want to jeopardize a project in its very, very early stage where there is no paying customer yet by choosing a name that is
I have no
confused.
paying customers currently, but I will give you what my
Yeah.
new brand is.
So the new brand is Credentially.com.
I like it because
Credentially.
it stays into one word. It has no numbers because I honestly I would have given you worse problems with first because people wouldn't know if it's one ST or if it's
Yeah.
spelling it out. So I like getting away from anything that represents any number. Never
Cred-
brand with a number.
Credentially, and
Where does that come from, Martin? Explain yourself. Where did that come from?
That is a very, Michael, that is a very profound question. We have Khadija, you are here, right?
I'm here. So it's actually Credentalix.
Uh,
Yeah, Credentalix with a LYX in the end. And basically we came up with a list of names that were basically conjunctions, I guess, of different words. And the first one that we came up with was credental IQ. Sorry, now I'm blanking.
Dental
But
IO.
yeah, IQ, not IO, not with that thing, but more about like credentials and IQ. But we kind of played around with the suffix of it and came out with different ways, variations of spelling Credentalix. Yeah, so we did an FTO and found that no one's taken it yet. And yeah, in each variation of it, so that's with like CREDENTALIX. Yeah, and the Y variations, yeah, in place of the I's. The only thing is that I guess the spelling is somewhat not really that normal, I guess.
Yeah,
Well,
is it?
it's a new name. It's a new name. So marketers will tell you there's messaging and imaging. Okay. So when Xerox or Lexus came out with a new name, it had no messaging or imaging, whereas Coca-Cola and PepsiCo, PepsiCo had a message and an image. Pepsi, the idea of pep and get going, and Coca, like it has cocaine in it or cocoa chocolate. But what is the messaging of this I can't even pronounce it. Credentalix?
Yeah.
Yeah, what's the messaging and imaging? It's got to be in the brand, or it's a new name like Lexus or Xerox, and you're starting from zero.
And it's not bad to share brands right now because now's the time. If you ever had to rebrand it again, you could before you do it all. But why? Yeah, the LY. How do you do the last part? I'm
So-
still stuck on how you do this last part.
Can you type it in then into the chat? It's probably better if you visualize it that way.
Because I'm thinking that you can leave off creden as how you brand around it, and really you're only gonna have to brand on how to spell the last damn part of the
Joe,
thing, so that way
message,
people understand it.
Messaging and imaging that I got when you and Martin first mentioned it, Christina, the credentialing, it sounds like
credentialing.
certification. It sounds like Certipore, or it sounds like getting a college degree or a passport if you're an immigrant. Your credential is like a piece of paper, and that's the message and image that I first got in my mind when you and Martin mentioned it. So what is it?
Yeah, I guess the STEM word would be credentials.
Hilix.
Yeah. So
But is it like getting a piece of paper certifying as an electrician or certifying
no, but you
as
do
a
get
plumber?
certified as a founder of a company.
Terminal or emulator? I don't hate it.
As a founder. Okay. Well,
Yeah.
Martin talked about the Founders Institute in Germany. That's the founders. That attracts people starting a company. That has a message and image that's very, very clear.
It's descriptive as well. Yeah.
Michael, it means terminal.
That sounds like a cancer drug.
No, as in like walk up to a terminal and use a terminal.
Hey, people.
ATM, Joe, was a great marketing success. Automated teller machine.
Wait.
Apple now is doing Apple innovation, and they're saying that's the new slogan. There's nothing artificial about Apple intelligence. I'm sorry, not innovation. Apple intelligence, and the slogan is Apple intelligence. There's nothing artificial about it. That's going to be $1 million slogan, $1 billion slogan.
Okay, so in very short words, the whole product is in its very early stages, and we are currently passing the gate from proof of concept to prototype.
If you gave it just down to Tilix instead, I'd do that
Uh,
if that wasn't used.
Joe,
How do you
Because
spell
less
that,
letters
Joe?
better.
Joe,
How do you spell that?
You
we
might
can
want to
do
put that in the chat.
we can do a lot. We can do a lot of things, but all what I want to say is before we develop the whole product to perfection and until it works, we are doing this in an iterative way. And what I can tell you is that we have changed the brand of the product because there are not many people out there who even know about the product, and now is a good time to do so. And now we are testing the response, market response. And the market response depends both on people who want the money and people who give the money. And in addition, on people who support the entire operations, because that project is much more than just, and I learned that from Muhammad Yunus' book, that project is much more than what a patent attorney alone can achieve, even if he has very good ideas. You need people that work in real life and they think that this is something that they could promote. And what I can tell you is that we are now creating a new asset class for investment. And of course, there are many people out there who need the money, which is quite funny because just today I received someone with 2 projects in real estate. And actually, what he wants is someone who converts the real estate into asset tokens, which then becomes a security. But what we do not want is we do not want to issue securities. We want to issue service tokens, which is a huge difference in the world of blockchain and blockchain financing. So I want to stay out of the securities market. And it's rather a future market, which is not a security. And the problem is now how to reword projects that are about mirroring a tangible value to a non-tangible value and then trading that non-tangible value on the stock market or on a market, on an exchange. So that was a very insightful exercise for me. And I would not have had that exercise if I had not started that project. So that's one insight. Then what I also found out that the founders, they fear the audit like, I don't know, Satan fears Jesus. and probably my guess is that 10% of the founders make 99% of the real revenues, because the
Well,
other
Martin,
90, yeah,
Martin, yeah, the
go ahead.
reason the audit is such a threat in the last 5 or 10 years, they're called NFTs, non-fungible tokens. So if you use the word token and blockchain, be careful because these NFTs, even blocks of stocks in certain vertical industries, are collected together by what used to be mutual funds, but they create these funds that are less risky because they're a collection of stocks, and that's a new thing on Wall Street. And they're also trying to tie it to instruments that are called NFTs, non-fungible tokens. Fungible is a funny word. It basically means is it liquid or not? Can you sell your NFT and get cash currency in any country? And the answer is no. That's why they call them non-fungible. So be careful. Your audit people are absolutely correct. It's a lot of people are ending up in jail trying to sell these NFTs and they have no value whatsoever. They're like junk bonds.
Michael, does that part of me says, why does it have to go on a blockchain? Because you can do it on a centralized network and still call it something.
Well, I
because
think
I'm
Bitcoin started it, Joe. A token called the
Yeah, but
Bitcoin. is a
Michael, you can
currency.
even do it on paper if you want. It's not about the blockchain. Blockchain is a database
okay
technology.
Okay, so you're selling something that has no underlying
because
asset value, Martin. That's why they call it a non-fungible. You're selling a hope and a prayer and a Ponzi scheme.
well, as an example, what I would be having Martin come in, I would literally be wanting him to audit a database as kind of the structure of what it does for the client. Because if it doesn't meet the user requirements, then it's not a product. So why is it a 0 or a 1? It's a 0 right now because it doesn't have a customer. In some ways, forcing an audit means that you're forcing a beta user to say that it has the right thing. So how do I make sure that in one way Martin's benefiting from the work that I am almost perceiving that he's doing if he comes in to audit my company? Well, he has to have a rake somewhere. So the business model still needs to be part of it. It almost reminds me of like the GoFundMe's, that you know who the first founder or first investor in the GoFundMe is the founder, because they start the account and they almost have to precede some of the GoFundMe with some money to get a little traction before they can even show up on the SEO metrics of their project.
Yes,
So they're
yes,
usually the
Joe.
first purchaser.
If you read the Muhammad Yunus book, you would find the same story there 50 years ago.
And so what's the one part is I want to know how you break that. Martin, that's what I want to know, what you're breaking on that portion of it. But still, I see in the industries that I'm around, the medical device manufacturing, not a single founder would hesitate to accept your audit. At that point, they're all thinking you're value adding. You're making them more viable.
Yeah, but the problem is that only 10% of the people who ask me see us as a value adding.
Well, then
90%.
they're not maybe the persona you focus on.
Yeah, of course. That's why the problem. Yes, Joe. That's where I'm coming from. And
Hence I volunteer as tribute. I would love it if this database almost became a structure for you to do that kind of auditing.
yeah, sure.
Because
You can-
that's really what I built this database for, was auditing a chemical engineering plant going up down to every wire and sensor that you might want to throw at it, and everyone's story is different. So you needed a structure to hold it all.
Yeah, of course. So the structure was what I described the first 12 minutes of today. There must be a starting point.
Risk.
Yeah, of course, that's along the way. There must be a starting point and there must be a vision. And between the vision and the starting point, there are certain transitions. And the transitions are marked by only four, not 40 and not one. Transitions, gates, if you might
Okay.
call them. Yeah.
I do
Hey,
call them
Martin.
gates, but usually the gate review is just make sure that there isn't risk. And if you can make sure there isn't risk, then great, move forward.
Okay. So can we agree that risk is the inverse of progress?
It's
Well,
the
Martin,
constraint of progress.
Here, Joe Martin, there's a show called Shark Tank. I don't know if you guys ever watch it, but
Yeah.
No, nobody
okay,
knows
Kevin-
Shark Tank here. No, I don't know
Well,
Shark Tank. Joe, do you know
okay,
Shark
it's-
Tank? No.
I prefer to listen to the pitch on a
Yeah.
podcast
Here,
versus Shark Tank.
the key is a guy
I
named
prefer
Kevin
to
O'Leary.
listen
He
to the
says- he
Piranhas.
says-
It's the Brazilian version. Yeah.
Or
he
nails
says,
on a
"Give me your-"
chalkboard.
Okay, Kevin O'Leary says, "Show me your numbers." So
Okay,
before the network,
Michael,
will allow
what's
them
your
on,
point, please?
my point is they have to have sales. O'Leary says, "Show me your numbers." They have to talk about their sales, not just pre-sales, Martin. So Shark Tank is your audience. Think of Kevin O'Leary, and if you convince Kevin O'Leary, you'll convince me.
That's Kevin O'Leary's investing strategy. That is not the strategy of innovating and taking something from 0 to 1.
Well, I can tell you, venture capitalists and investors in Silicon Valley like the Shark Tank
Exactly.
model.
Martin wants to be pre-venture capital.
Well, good luck. Good luck. There's smoke and mirrors, Martin, and you're going to be among those guys.
All what I want to say is Michael Gerber, with whom I started after my ranting the first initial 12 minutes, recommended to read Muhammad Yunus' book to me, which I did. And then I did some investigation. And Muhammad Yunus received the Nobel Prize in 2006.
How do you spell that last name? Mohammed
A Y as Yankee, U as uniform,
Yunus. Okay,
N
cool.
as
I got it.
U as uniform, S, Yunus. And if one guy is really cool, then this one.
Building a social business, banker to the poor, a world of 3 zeros, creating a world without poverty, and purposeful empathy.
If there's one guy in this world who is really cool, then this is Muhammad Yunus. Because he was raised in the US, I believe, or after he was raised in Bangladesh, he went to the US, he became a banker. And at the time when he did this, the US was very clearly the strongest power on this world. And he never forgot his roots, and he went back and solved the problem. And that's what I call to make the most out of your life, because we are here for a limited time, and the purpose is surely not to run after wealth or after whatever, but to make the most out of your life, to leave a legacy. And if there is one who left in the world of finance or innovation or whatever business, who left the most important legacy, then the Muhammad Yunus would be among them. It's not about total wealth that he accrued over his life. It's about the difference that he made from his starting point, which was in US dollars measured today 0, to lifting an entire country and also creating a new asset class for investment. And if that is not an example for life, then who? I mean, we can do lots of things like Mother Teresa giving up her life and creating followers for helping the poor or whatever. I don't know. I don't want to go into details. I have a lot of ideas of people who did important things within the area what they could achieve. But this was really one of the most important, I would say, in the area of financing and entrepreneurship, because he helped the entrepreneurs on the base level, which are women, very poor, by giving them a $5 or $50 loan. And if you read his book, then you would understand it's not about giving a loan. It's about creating ecosystem. I don't like the word ecosystem. A system where
Just having a space. The
whatever.
fact that there is a space.
Create something that would make sure that they are not deterred from paying the loan back. And if you read his 10-page book, or I only have the 10-page version or 20-page version. I need to meet him soon, and I believe that I can learn more from him than from any business advisor, because the business advisors would tell you how to become more famous or how to become richer or how to have, I don't know, but that's not the issue, because that's not the ultimate purpose. You cannot measure the legacy that you leave by the amount of money that you have on your bank account, or the number of PhD degrees that you put in front of your name. Is not that. Definitely, life is very different from what we think, and that's the entire purpose. Anyway, thank you for giving me feedback. I really love that. Today was a version that circled around myself unintentionally, but I'm so thankful, Michael, for your feedback, and also Joe for yours, and especially Carl, because you helped me by looking up Muhammad Yunus information and broadcast it here.
You're welcome.
Thank you. Goodbye.
It is
See
now
you
on my
next
read
week.
list. Thank you.
Thanks you. Goodbye.
Bye.
Thanks, Martin. See ya.
Bye bye.